Good morning, everyone. My name is Vincenzo Casillo. I'm a principal at Cedar. A very warm welcome to you to the Digital Banking and Payment Summit. So let's start now. I would like to welcome on stage Chetan Parekh, senior partner at Cedar, who will present the digital and payment, give us a market overview. Welcome, Chetan.
Morning, everyone. Glad to be the first speaker of the day, and it's always very, very enticing to see the forum. So we'll be discussing two key aspects. Both are the hottest topic around the planet. Again, glad to see a physical event after the whole COVID situation, and COVID has only helped each one of us, and same it has helped big way the industry. So what you would see in the coming pages, just go next. Yeah. So digital banking, as we all know, while it's just one name, and many of us saw it starting as a retail or a corporate internet banking prior to COVID, has materially shifted. And when you see that, looking at, again, trends, if going next, when you look at the GCC, so I'll take you through the GCC, what market has looked like. It's maturing. UAE especially is coming along long way. Type of products and innovation use cases. Now, many of these were ideas prior to COVID. When somebody launched a digital bank, it was just an idea. Today, it's not only making money, but it's having millions of customers. So if anybody who is at the bank can tell you, most digital banks started 4 years back, today has grown in a significant way. So moving next, if you look at, so now let me first define, now there's a need for us to define different types of digital banks, and that's again, glad to see that. So where we see this market as three key aspects. So there is neobanks. These banks typically were erstwhile traditional. They were the first to spot the opportunity, and they came up with a separate brand, separate offering, typically using their main banking license and relationship. So banking systems, payment systems, integration to central banks, they leveraged, but they innovated on a new brand and a new customer experience. So what mattered for neobanks is going away from their branch and channel experience and building a unique customer journey experience, typically on a mobile or a tablet kind of form factor. Now, form factors will keep changing. We'll see watches, we'll see new form factors coming. But if you look at ELA, a very, very interesting case study on a neobank, a bank in Bahrain, traditional financial institution bank, wanted to go into digital play. And they built ELA. ELA, for first time, introduced a lot of interesting Islamic digital products. Like all of us know, in Islamic world, there is a kitty. People group the funds for a particular objectives of savings, for family, for friends. They digitized it and launched it. Today, ELA is having daily volume of 100,000 transactions, right? So highly successful, being replicated. It launched in Jordan last week. It's going to get launched in Egypt next year. Has 14 market launch plan. And again, significantly growing. So that's a classic neobank built by Bank IBSi, which is a traditional FI bank. Liv is market maker. They started the whole industry back in 2016, 2017. Today, they more than 500,000 customers, very, very matured, but again, extremely focused in the kind of neobank offerings they've built in. Similarly, the second type of banks emerged. They never had license, so they approached either an existing license conversion or got a completely new license. Now, challenger banks are banks who have built digital. They traditionally do not have physical presence except service centers. And you see Meme, I'm very, very glad to see that because 2012 I designed Meme. When I designed and launched in Saudi Arabia in 14, we are ahead of the time. People didn't recognize digital bank in 2014. So from there, what you see today, Wio, which has taken a license of FGB, or a ZAN, which has taken license of Emirates NBD Bank's group license. They've taken these licenses and relaunched a bank which are moving towards 250,000 customers and then explosive growth. So they are responsible for reimagining the banking. So you would typically see challenger banks reimagining. They will be fiercely competitive. Their cost structures are very different. These are 50 to 100 people bank. They don't have thousands of people, branches, none of those overall. Yep, so they will grow very, very fast in the journey, but simple products. Then comes the payment banks. Of course, UAE and Saudi has a bit of a laggard situation with payments. Asia has taken a huge spike on a payments bank, but Saudi has changed that. Saudi last year introduced 3 licenses. STC Pay in UAE, we saw YAP coming in and taking Rackbank's license to use. So these payment banks have a very, very different objective. First, enabling large retail payments volume, creating a new market, which none of us know, peer-to-peer payments. We all know that we want to pay someone, but can we? So UAE is enabling payments through NPSS next year. Next year, between first and the second quarter, you would see all the UAE banks into the payments. Now, of course, the payment service providers have been existing, licensed. They're growing as we speak. But the payments bank in a full form as a focus area would start emerging in the Middle East, because there'll be real-time payments available as a framework in UAE, Saudi, these 2 major markets, and then other markets will kind of follow on. Already there is a GCC RTGS coming through, there is a BUNA coming through. So while many of these initiatives are 3 to 5 year government initiatives, they will create a railroad and backbone for the payments banks. Moving further, if you look at the market, and very, very interesting, if anybody believed our digital bank is not really there, we may measure a very interesting index called Digital Readiness Index for each country in their ability. What do you need for digital? You need a very, very strong KYC, eKYC framework. So based on eKYC framework, based on real-time payment framework, that's what's required. So UAE is, of course, right ahead with 10 plus proper digital payments or challenger banks. Oman is yet to launch one, but in 2023, there are 2 banks on cards for launching. Qatar, again, started with wallets first. They've gone down wallet, but yet to go and see a real digital bank. Bahrain always had been more open. They were the first to allow fintechs. They were the first to allow cloud. There is 0 restrictions on banking and where you can host your cloud. So Bahrain has again seen 2 large launches, Meme and Ila, both successful. It's a very small population of less than 250,000 Bahrainis, so small market but very innovative market, and they want to own digital assets across the MENA. So that's where we see them. Now KSA, huge opportunity, just 3 banks. This will grow to 10 banks in next 18 to 24 months. SAMA has been very, very categorical that they want to select who gets license and who brings what kind of innovations. At the same time, the security and highly customer experience driven. So STC was a natural choice, largest telco. As Sanjeev mentioned, telco plays a very, very big role in providing the backbone, networks, and so on and so forth. And again, Kuwait is an emerging market. If you look at Kuwait, it's like a decade back. Dubai, emerging market, wealthy population, government willing to invest, digital licenses coming our way. So again, 8 to 10 digital banks in next 18 to 24 months. So that's what we see at the Kuwait as well. Moving next. Now, when you look at, can you please go next? Yeah. When you look at the digital banking, what are the top 5 trends? And again, it's mainly how do you use fintechs collaboratively using your license or your parent bank's licenses and building innovation. Fintechs would never have muscle to go out and approach either an investment or a consumer market. So banks in a very, very sweet spot can pick up these innovations. We run our own fintech lab with 20 plus fintechs. And every year these fintechs grow and then become a bigger organizations. Neobanks, they are here to stay. And you will see out of top 15 banks in each market, 5 to 7 having their neobanks. And there's space for everyone. Because what we are seeing is a material change in consumer behavior out of COVID and preference, customer preference. Why do I need to go anywhere? Can I have just a mobile app and all the services on the mobile app? The whole trust angle is taken care of. There is a trust on mobile apps that they can do instant payments, and there is, next generation doesn't have those fears on the money, right? So B2C, very, very good story. Now governments are building blockchain, and you will see CBDT, which is a new currency, is coming in from most of the governments. India launched one last week. UAE is going to launch Q1 in a formal way. Nigeria and all are quite ahead. They've been around for a couple of years with digital currency. So if you see across markets, mainly blockchain will enable currencies, trade, and a lot of industry security use cases. So again, if anybody believes blockchain is not picked up, it's a foundation framework which is coming in with distributed ledgers and a lot of good apps coming your way. Again, it's not a replacement. It'll never replace Swift. It's a parallel, Ripple and all are going to be parallel corridors. At some point, consolidations would happen. But at this juncture, you need to have a play there to ensure that your counterparties are getting onto it. Digital banks in the mainstreams are going to pick up fintechs like Yap, allow mass market. So whenever you see mass market, India, Pakistan, most of these mass markets, Egypt, in this part of the world, Iraq, Iran, you will see providers, mass payment providers. Again, apart from digital app, which all of them will have their innovation, they all are looking for foundation layer and huge amount of service network, which requires to be delivered in customer experience. Last but not the least, if anybody believes wallet is dead, wallet is just does not having the right ecosystem. So Clip and multiple of these wallets, which came a bit ahead of their time, with real-time payments and background KYC frameworks being in place, will significantly grow. So these 5 trends we see is going to make a material difference. Go next, please. Now you see the deals. Now what we see is, while payments and volumes, a lot we see it from suppliers' perspective. What's selling in the market? And you see right from 2020, it's the best year digital banking has seen. Most banks thought branch banking would never return, and they invested majorly. And you can see almost double the volume of digital banking deals. And participated significantly by Temenos, Backbase, Infosys, and multiple of players like TCS, Oracle. So everybody is in the fray. And the key is the pie is quite split. While there are clear winners on top 3, but it's a very much a distributed deal. And market has stabilized after that. In 2021, 2022, we see. So deals are flowing in the range of 25 to 30 deals, which is not a bad deal, because if you see what it used to be a few years back, it used to be 10 to 15, right? So of course, COVID was a bit unnatural behavior, but it's now stabilized. And there are clear leaders emerging in the market. Moving further. Now, when you look at the business models, now all this technology is great, but how are you going to leverage this? So if you are a traditional bank, what are the business models and options? You potentially look at taking your brand through a neo or your own banking channels. That's a natural extension, no material investments. You allow your traditional brand to grow. Or you live and open up a completely new mobile bank with a separate brand, but it's a long-term commitment, remember. It's a 5 to 10 years, first 3 years to 4 years growth, introduce accounts, payments, credit product comes in year 4, year 5. That's what we've seen for Revolut, for any of them. Credit products are a next set of growth to make you a full-fledged bank. So you will see a huge amount of them coming with lower commission payments and offers. Last but not the least, you look at full-fledged mobile-only banks. So full-fledged mobile-only banks, the so-called challenger banks, are going to come and play. It's huge convenience and innovation. And that's another business model, but requires a completely different ball game, investment, large license costs, capital costs, your all kind of commitments, building a completely new challenger bank. So we see traditional bank not trying to suddenly go and do the third model, but you yourself can do what's right for you. Moving next. Now, when you look at can you go next, please? Yeah. So if you look at the market, there's a space for everyone. And each of these banks has innovation and use case. So Vio, which started with a very interesting business banking SME. And Fab invested in it, ADQ invested in it. They were to believe that they could build a challenger bank on cloud. Vio launched with very successful POC. Our POC is right now in the final stages, and it will get launched. They will come in Q1 with retail, and that becomes, again, a pure play challenger bank. Zan taking a very different perspective of a platform bank. So what's a platform bank? I am building a platform, launching a platform. Platform can be leveraged in future for retail payments, B2C, B2B. And Zand again has built a business banking platform where you can do what you wish to do. Again, a Pakistani-based fintech innovated on a front-end app and grew this very, very interesting solution. Yap, again, based out of UK and Pakistan, a very, very interesting player, entered the market saying, you are a traditional bank, we can make you digital in 1 year. But you need to be mass market, you need to be more than 1 million customer. So Yap took pure low-level corridor payments, accounts, CASA balances on a payment switch platform without a core banking. Without a core banking, a pure payments, as we say, payment bank. Now they're going to go into 9 markets, and every market, of course, they have an exclusive bank who is offering them the central bank payments connectivity. So a fintech, classic collaboration. You look at ELA going to Islamic digital bank market, very, very Islamic products. They don't offer accounts. They offer savings pot, investment pot, and then offering business banks to, again, operate on a payments corridor. STC, large mass market, local demand, local consumption. And experience, again, business banking, something very similar to a lot of large banks corridor. Move next. So now each of these use cases which you see in the market is unique. When Mashrak started with the Biz Neo, everybody thought when the chairman of Mashrak announced that they will shut all the branches in 3 years, he must be joking. 3 years later, Mashrak has now 7 branches from 48. If you enter there, one of the digital branches, it's truly innovative in how banking can be done. So they've really showed how retail banking leader can transform and not grow on a branch banking. Again, a very different B2B play they've done with tablet, and you can open your business banking account. Anybody who's banking in UAE knows if somebody's opening new business, trying to open an account, it's a nightmare amount of compliances. This bank opens your business account on a next day basis, right? So that's very, very interesting. Liv is taking payments and now upcoming loan products into the next set of innovations. Meme believed in a very different product. Why should bank have multiple products? We should have only 2 products. One account. What's a one account? One account is a current account plus a saving account plus an overdraft account. Just one account and a one card. And one card. Can be credit, can be debit. You choose how you use it. So they launched a very, very interesting offering in Bahrain and Saudi. They were one of the first. Of course, they struggled through the growth of 4 or 5 years. But today, 500,000 customers, growing fast, on its track. Something very similar to what ING Direct did in Europe. Moving next. KFH Jazeel. KFH, a very large group, but had a community objective in mind. How do I build a community bank? So KFH Jazeel Al Maraya, as it's called in UAE, are community banks launching community banking services for housewives, students, not so well off people, and offering community banking services. We spoke about Zen, we spoke about both of them are platform banks with a different objective. They're not trying to offer again the same account, but they're just trying to offer an experience on a platform. All of these guys likely to grow majorly with B2B tie-ups. Go next. Moving to payments. Now payments, again, we are in a very, very interesting situation. If you see, there are basically two types of payments. Go next, please. When you look at GCC perspective, going next. So B2B and B2C. Now, many of you are transaction bankers, and you will say B2B payments has been a struggle. So B2B payments is a struggle because of customer experience. Organizations prior to COVID were not willing to pay digitally. But post-COVID, CFOs and payment managers, all of them moved digital. What you see as a 5-year person CAGR business is likely to grow in a significant way. Again, 3 or 4 players comes out as a B2B framework players. MasterCard, of course, went in investing very big. MasterCard and Visa wanted an entry into the B2B payments. But the story on the growth is mainly on B2C. And this is not going to be very different next year. In next 2 to 3 years, B2C payments are continues to go from 15 to 25 to 30%. This is likely to also change with NPSs and real-time payments coming in. So next year, UAE introduces request to pay, which will allow 7 million bankable customer base to start expanding to 7-8 million. And suddenly you can pay somebody by mobile, no banking relationship. Suddenly you can pay someone by email from May next year. So all of these request to pay and address layering service, which is coming in, is going to have these graphs changed in the way it's going to be in future in the range of 40 to 50% B2C growth. Of course, the kind of payments you see, this is a completely new paying friend to friend and peer to peer, right? So that's all coming in coming year in 2023. Go next. Now, when you look at the payments, each market has their unique problems, but remember, we don't have a common payment framework across MENA. Each market has their unique challenges. So when you look at the contactless, under $100, that's going to be a mantra. All the payments, customers' first preferences, tokenized payments on their mobile, on their cards, completing the payments. So that's going to be a major portion of B2C payment. Digital currencies are going to change the way people pay. So wallets, which weren't so popular, suddenly will start carrying currencies, and people will stop carrying their wallets, actual physical wallets. So that's the change you will see. Some markets may be early, some markets may be late, but next 3 to 5 years, we will move to a complete digital currency. Digital payments, again, Qatar has not seen banks, but they've seen huge amount of payment corridor changes, and they are going to be, again, riding on World Cup and multiple other investment which Qatar is making on the payment side. And again, bank and fintech collaboration. So if you have a product, markets just approach large banks. If you have a payment as a service or any kind of corridor with $100 to $500,000 investment on a yearly basis, bank is willing to do that for the fee income, because fee income will quickly offset in playing for this play. Yep. Moving next. Now again, when you look at the deal, so payment deals are even more interesting. From payment hubs, what we typically call payment deal is a payment hub or a payment service provider or a payment bank. Now, again, large number of deals 2019, thanks to payment license opening up in many markets. PISPs and all of those invested in a big way. UAE has a large number of them today. 2020 and 2021 again has stabilized, and you will see a consistent growth on this play. Again, companies like Volante has grown in terms of fintechs. Temenos has a payment hub from a long time. They've succeeded. TCS have been one of the larger play with tier 1 banks. Oracle, FSS. So anybody who doesn't know, YAP runs on FSS. FSS is the payment switch. Yep. So these players are not known because their brands, which are running on them, they make all the difference. So some of these, including ACI worldwide, are backbone networks which is running these payment organizations. Moving next. Again, when you look at, so there is a clear two markets here. And you need to be very clear your product and service organization is focused where. And if you can create a domain for B2B and see how business credit cards, which is not been very greatly successful, even after pushing by Visa, MasterCards in a big way. What are the business banking payments? Because again, the traditional banking portals are inconvenient. But mobile can become convenient. And many other services from, see the way payments are now seen as payments plus collection. I need not pay, can I collect? And loss of education, petrol stations, they all are a collection use cases on rather than a payment use cases. So there's a whole B2B solutions and a lot of interesting fintechs. But you really need to be having a strategy, what volume, what fee income, what's the level of margin. And it's a difficult market, remember. It's not an easy market. Anybody who thinks that can succeed in a year, no, it's a difficult market. To build, it takes time. You need muscle. B2C, very different story, but it's an ecosystem play. And when you look at ecosystem, again, if you are launching a wallet, what's your merchant story? So it's all about your merchant and other stories. Yeah. Moving next. Again, UAE has been forthcoming in setting up this. Clip has been around with large investment. Sari in Saudi, large potential in what they're coming up with Saudi payments in 2023. So if you want to focus your energies, these two countries are a significant payment play. And then Qatar and Oman are about to start. So they're about to get into the play. And in next 24 months, they grow. Go next. Again, from what MasterCard and Visa have done, Floss, and what Click to Pay, as well as unified payment. Now, what India is doing is exporting its payment innovation. And NPCI has now 64 countries signed up globally to accept UPI. So UAE and other Middle East countries are also likely to go for a corridor payments using UPI. So it's all going to be an interconnect payment network with some amount of shareholding and consolidations. Go next. So 10 key messages. First, it's an accelerated pace of digital transformation continues to be seen. People aren't investing in branches anymore. Leverage your new technology to reduce cost. So don't buy just $1 million or $5 million technology, but not realizing what cost are you taking away from your bank. Open banking is coming next. So open financing is going to ride on it. Try and get there from an eco and a payment service perspective. Regulation is going to support hugely. Government objective will be blockchain, financial inclusion. Government isn't going to support well these. Demand for contactless is going to increase. Tokenization is becoming a norm. And a very high collaboration with fintechs is the way forward. Benefits of NPSs can be immense. And NPSs, we may be calling NPSs, Saudi may call it instant payments. Qatar may call it differently. But real-time payments are going to be the future. And this is a new market. It's not really cannibalizing anything else except physical cash. So it's a new market altogether. And steady growth towards currency. Currency is coming in. So are you there in the wallet play? How the currency play you're going to participate in the ecosystem. Last but not the least, what's the customer experience? All the digital banks can differentiate on customer experience. So what's the customer experience? Yeah. Thank you so much. And of course, great having all of you. If there's any questions, I am available through the day for any. Thank you so much.